Good morning, everyone, and welcome to a webinar, investment webinar to our shareholders from Thorney Technologies. And I hope everyone's keeping healthy and well, and are looking forward to Christmas in hopefully a lessening COVID world for Australia. We've decided to hold a number of these webinars more progressively to inform people in a more timely manner, more informed manner, and introduce some of the speakers, usually the founders or CEO of companies that we have invested in, so you get some better insights into the nature of the companies we're investing in and why we're investing in some of those companies. In particular, of late, we've been talking about the strength and positioning of Thorney in the pre-IPO market. That is, those companies that we believe will come to the market within 6 or 24 months. And we're able to establish a position prior to the IPO in terms of equity position or through a convertible note that enables us to have a lower entry, a cheaper entry, but more particularly to get involved with the company at an earlier stage and have confidence in how they're tracking their business plan, their vision, get to meet some of the people and why we believe they will be successful, and really go on a longer journey with them from an earlier stage. That's proved to be a very fruitful position for Thorney Technology, and indeed why we recently raised some additional capital so we can invest further in this sector where we're being approached to anchor some of these pre-IPO capital raisings. Recently, in the last couple of weeks or month, we've had 2 of our portfolio companies come to the market. Both have proven successful on the IPO and had a significant share uplift, which is a justification and further validation of our approach to what we're doing at the earlier stage. Those are Credit Clear, which is up over 100% since it's publicly listed as an IPO, and also Clean Space, which is up some 30 or 35% since its listing as well. Both companies in really good shape and positioned to grow and expand further. And as I said, we've raised more money to participate further. We do some earlier stage investing, which might take 2 to 4 years to come to the market, and positioning. We hope those companies will be the cream of the cake also for Thorney Technology shareholders. That will be more in the unlisted space, and that includes in Australia as well as overseas. And obviously we're active in the listed companies as well. But back to the pre-IPO space, we're actually going to introduce today our first speaker, who we're delighted to have, and we thank him for coming on the line from overseas. It is a company that is due to IPO this side of Christmas very shortly. And I will introduce to you Dr. Baju Thacker, who is the founder and CEO of a company called Doctor Care Anywhere. And just a little bit of background before he comes on the line to speak. He became the Chief Executive Officer in the year 2020, is a qualified medical doctor and McKinsey alumni, has been responsible for leading the company's growth from inception through to the current vertically integrated digital health provider that it is, which serving some of the largest blue chip health insurers and hospital groups in the world. He's a graduate from Guy's King and St Thomas Medical Schools and holds a Bachelor of Science in Philosophy from King's College in London. The company has over 1,500 corporate clients and 2.3 million patients on its platform. It's a doctor-founded digital healthcare company, leading the way in joined-up clinical care. From fast and convenient GP appointments, diagnostic tests, and specialist consultation reviews to medical support overseas, the company does help some of the world's biggest businesses support the health and well-being of its users and its customers. The company has brought together primary and secondary care onto one easy-to-use platform. So no matter where they are in the world, patients get 24/7 access to high-quality clinical care through their phone or through their laptop. So with the launch of the dedicated mental health service and continuous expansion, the company has continued to innovate new ways for the business and insurers to care, as I said, for their employees and for their customers. So without further delay, I'll get Baju to join the webinar and actually lead off some of the discussion. So thank you very much, everyone, for joining, and thank you, Baju, and welcome.
Welcome, and good morning, Alex. Good morning, everyone. Thank you for having me.
And I presume you're in London, and it's an ungodly hour there, so thank you for making the effort.
No problem at all. No problem at all.
So, Baju, we've talked a number of times on the phone, and you have with the rest of our team, and we are excited with what you've achieved going forward, as well as obviously what you've achieved to date. So I guess as a result of that, and you're going to the market, you're going to become public. But before we talk about that, which is happening soon, tell us a little bit about the Doctor Care Anywhere, and why is it different from other telehealth type of companies that are out there? Yeah,
sure. As I say, you actually gave a very good description of the business, so I appreciate it. You doing it justice. But I guess a sort of quick way to describe Doctor Care Anywhere and why we're different is thinking about the problem we're trying to solve in healthcare. As many of you will know, healthcare is an incredibly disjointed sector. We split up primary care, we split up secondary care, and we split up tertiary care. And we have to travel through all these bricks and mortar environments, whether it's to see our GP or to go for diagnostics or to go into hospitals. And as a clinician, what I really wanted to do was solve that problem of a fragmented experience and journey by bringing primary care and secondary care together under a single platform. And why does that really matter? Well, first of all, when you have a disjointed ecosystem, the patient journey is very poor. I'm sure you've all experienced that at times. And when a patient journey is poor, engagement in medical management tends to be poor, which means you get bad clinical outcomes. But also with a disjointed market, you have split budgets, and this is key. When you have split budgets across primary and secondary care, you have lots of perverse incentives. Of course, people want to hold on to their budgets, and we don't really have sight of what's happening across all of them. So again, if you can bring together the market, you can get rid of those perverse incentives and control the pathway across all the payment areas of activity. And third, we don't have clinical data all in one place because of that fragmentation. So again, if you can bring it together under a single platform, then you can have one single patient record, and we can look after our patients so much better. And that is what we've been doing as a telehealth business, as Alex said, bringing together primary care, fast access to a GP, integration into diagnostics around the UK, a total diagnostic network, the ability for those diagnostics to be read by a specialist secondary care consultants, and provide the ongoing management plan to our patients. So a fully integrated platform, the digital front door through our GPs. And that's what makes us so different, because most people are just focused on a one-to-one consultation with a GP and not the whole journey that we bring together.
Right. And has it been difficult to get GPs to respond to the platform and to join in, and indeed specialists as well, and from the medical point of view? And what about the insurers at the other end?
Yeah, so interestingly, as you all know, generally healthcare is quite slow to adopt new ways of working. And when we started in 2013, it was only the very early adopter clinicians who saw this as a new way of working. And so we went from having maybe 5 or 10 doctors on our platform to now having more than 215 clinicians, GPs, and specialists on the platform. And actually, if I'm honest, a massive adoption curve has changed as a result of COVID. So what everyone knew academically is that at least 75% of primary care can be done through this modality. But it's difficult to accept that if your traditional job is doing it in a traditional way, right? You have to admit that you could have done it better. But then COVID came along and everyone was forced to use these modalities. And suddenly in the UK, we've gone in the NHS from 15% of all consultations being done by video to 75%. And that is held throughout the year and ongoing and is increasing. And that's applied for both GPs and specialists. That being said, to your second point with the insurers, as you know, we go to market through channel partners, and insurers, health insurers being a major route to market for us. They adopted this much, much faster in many ways than the clinicians. Why did they do that? And why do we have such big partnerships with people like AXA PPP, with the second largest health insurer in the UK? It's because they saw the ability for if they could use partners like us to control the whole pathway, we would get much better control of the claims cost of the patient. Indeed, by controlling the GP, the diagnostic, and the specialist, we're able to remove around 20% of the claims cost for insurers. And that's hundreds of millions of pounds for these guys. So the adoption curve for them is much, much faster.
And that's the insurance side, and that's the medical specialist side. What about ultimately the patients? How are they responding to the online service, the access 24/7, the overseas ability to access data? What's the response curve been from them, and how will you grow those patient numbers?
Yeah, so as you mentioned, we have about 2.3, just under 2.3 million patients on the platform. Getting them to use it the first time is the tricky bit. What can you do to activate and get them to trust that they can have a consultation through these types of modalities? And what we saw was slow activation in the early years, but then after about 2 or 3 years of the market growing, we were getting up to 40% activation rates across a cohort of people. And what was most interesting is when they first used it, they would repeat use it again within an 8 to 10 month period of time. And what that showed was, aha, I get why it's good. I now know I can use it. If you think there are about 3 to 4 consultations a year per person in primary care, we're already capturing 1.5 to 2 of them for someone who's already been activated for about 15 months. So we see that adoption curve changing significantly. Now, COVID, that's sped up. So we've got a great opportunity as a business to really get those 2.3 million lives activated, get them using the service, which obviously brings in revenue, better for the patient, and saves money for the insurer.
Yeah, and a lot of, we've been discussing internally within Thorney, and you see a lot of press who are the kind of winning companies and through COVID, and winning in the sense that their business model has been validated and growth has come through. What happens when the vaccine is out there and readily available and people have taken it? Let's look out 1 or 2 years. Why will these trends continue, this recent adoption that has happened? Why do you think that will continue going forward? We're certainly excited because we do believe it is, but if you could tell some of the listeners here why you're so confident about that.
Yeah, I think the question for me is, why would it not? So once a patient has used the service, we have now seen that, as I said, they repeat use the service. So our GP practices are now all open again. So what changed the adoption was that we went into lockdown, GP practices were shut down, hospitals were shut down. So people were forced into this modality of care. Now they're all open, our activation rates are still going up and our utilization rates are still going up. Why is that? Because once you've experienced that you can use the service from home, have your prescriptions delivered from home, you never need to leave, never be in a sick place, get your diagnostic results in one place, your electronic record in one place, and look after your family from home. Why would you choose to go in to see a doctor? Now, some people will need to. Some people need to have, the doctor's hand laid on their body or specific tests. So what's going to become interesting is those parties, and what we will look at is how we can do even more. How can we start to use remote technology in people's homes so we can measure their blood pressure remotely, their oxygen saturation, make sure we send nurses into people's homes to take their bloods. The more you can do of that, the more scope of care you can provide. And you'll see those types of services now being rolled out in different countries. So the maturity of this market is rapidly coming to bear. And I don't see us going back. I can't see a reason for it.
And can you just talk a little bit about your revenues and the unit economics around the business so people can understand the scalability of the potential for you?
Yeah, absolutely. So predominantly we charge on a utilization basis. We're doing circa between 20 and 23,000 consultations per month. And through our channel partners, we are charging about £45 per consultation. By the end of the year, we'll be at about 10.9 million in revenue is forecast in our prospectus, but we need to consider that that is based off about 300,000 activated lives of the 2.3 million activated lives. So if I double that activated lives to 600,000, we'll be able to double our revenue. And so you can see very clearly we've got a huge amount of lives to which we activate where we can double our revenues again. And that doesn't include the money that we're making from the diagnostic tests or the specialist reviews, as you know. And also we're adding on new propositions like mental health, where we're seeing about 10% of all those consultations are mental health consultations, where we'll be able to capture that waterfall. So there's a significant market for us to grow into that's already a captive base. But of course, we don't want to stop there. We want to be able to push up beyond those 2.3 million lives as well, both internationally and in the UK.
Right. And you are a London-based organisation, and you've spread your wings through the UK and into Europe. You're IPOing, however, in Australia. Why IPO in Australia? What do you talk about in terms of raising the money, and how are you going to? You've already talked about some ways the capital you're raising is going to be deployed. But first of all, to the listeners, why are you raising money through Australia and IPOing in Australia?
Yeah, I mean, Alex, it wasn't because we were a great cricket team. That wasn't the main driver for doing that. So firstly, when we started the business, we had two Australian directors back us as investor directors back in 2014, 15 times, and they've always been great advocates of the ASX, particularly for small to mid-cap businesses, hugely supportive of fast tech growth businesses. So we were introduced to the ASX quite a long time ago. The real decision for us is whether we were going to stay private or go public. And really, COVID was a massive trigger point for us because we saw 350% plus growth over the period of about 12 months. And what we knew at that point is that we wanted to be able to access the capital markets to take advantage of that growth. And we thought the public markets were the best place to go. I would say that really our choices sat around AIM and ASX were too small for Nasdaq. Hong Kong wasn't really a choice for us, and we had Australian directors. So the toss-up was between AIM and ASX, and we felt actually that ASX was a much better platform for us into the sort of Asia-Pac regions. We had Australian directors, and we thought it was going to have a much healthier future than AIM. So in essence, it wasn't a hard decision, and we're really glad that we made that one.
Yeah, we're excited about that. I mean, we're excited about the company, so we would have followed you and raised the money whichever exchange you went on. But I think it's a great vote of confidence in the deepening tech sector in Australia, the availability of capital, the excitement of investors, both institutional and retail, to start getting behind companies that their origins don't have to be in Australia, but we touch everywhere in the world because all these businesses are global. So you are coming to market. Is it in December this year? And roughly what amount of capital are you seeking to raise?
So there's a primary raise of about 65 million Australian dollars. So and what we're really hoping to do with that, it's pretty much all growth capital. So as I mentioned, we've got a captive patient base where we want to now drive those activation numbers up, because we know that when someone activates, they utilize the service and we get that first £45 and then the rest of the waterfall. So investing heavily in our marketing capabilities to drive that engagement, drive that activation. The second area is our mental health proposition. So we'll be adding that on with therapists so we can capture that waterfall, and specialist virtual consultations, more of that secondary care works as we continue to join up the whole pathways. And then we will now be looking at international expansion. We are obviously excited about what we can do in the UK, but the UK is a very small part of the digital health market, and it really is time to capture that growth. So we'll be starting to look specifically at the Asia-Pac markets and Australia, which we are looking at and excited by, but we'll see how we go through 21 before I come back on that again.
Yeah, it's very exciting from our point of view because all the stakeholders in the chain of involvement that you've talked about, be it the insurance companies, which most of them are global anyway, so if it works for them in one part of the world, they will encourage you in the other part. Doctors and specialists and other medical experts joining in on the journey for the efficiency and the quality of the input they can achieve through this, and ultimately for patients, be they in the workforce or privately at all ages, is a terrific, we think, opportunity in this digitally connected world. So I want to congratulate you again for what you've achieved so far. It's been a real pleasure to get to know you and your team. We look very much forward to the float that's coming up in a few weeks' time. And we wish you a lot of success, and thank you very much for joining and informing some of our shareholders and listeners of something to be excited about going forward.
Thank you very much, Alex, and thank you for your support.
Yeah, cheers. And ladies and gentlemen, we will continue straight into the second speaker we've got today, and we've had a pre-IPO one that's coming to market that we've just heard. This is a company that is a currently listed company. And I'll just do an introduction for Ed Clark, a co-founder, managing director of Yogi Limited. And we've got to know Yogi for quite a number of years, and we've followed his journey from really the early part of the concept to the building out of the platform and the model. And he will tell us about some recent terrific customers that they've just signed on. So Ed is the co-founder, as I said, of the managing director of Yogi. It's a fast-growing logistics technology company, which is the symbol of YOG on the Australian Stock Exchange. He is an experienced technology entrepreneur with extensive experience in taking innovative technology platforms to market in areas such as real-time communication, big data marketing, and e-commerce. Vice President of Sales at Temasek, Ed was part of a team that IBM recognized as one of the top 5 global startups to watch in 2014. So Ed's had a terrific pedigree. Before that, he was Vice President of Sales and Marketing with Silicon Valley and Asia venture capital-backed big data e-commerce marketing platform, Ematic Solutions, which now has more than 100 of Southeast Asia's leading e-commerce retailers on its platform. He's been featured in many publications and magazines in logistics and technology-related media. Now, Yogi itself is a cloud-based software as a service, or SaaS, logistics platform that seamlessly and uniquely manages, tracks, and optimizes freight movements along the entire logistics chain. And that's a very important point, the entire chain. And he will talk about that from sender to end customer, across borders and between logistics providers, be it land, sea, or air, and with subcontractors for multi-leg journeys. So I'm very happy to introduce Ed to everybody. We've known Ed for a long time. We're a very happy shareholder across our group, and in particular, it's a key shareholding within Thorney Technologies. So thank you for joining us, Ed. And where are you in the world at the moment?
Hey, Alex, thanks for having me. I'm in Singapore. So yeah, it's nice, bright and early here, but it's my normal bike. This is the time we'd normally meet for a bike ride with Harvey. So,
well, ladies and gentlemen, we always back people who are prepared to get up early and be on the job right from the get-go. So that's why we like Ed. And tell us a little bit about the journey, Ed. We've been there for a long time. It's been slow and frustrating at parts as you've built the sort of back end, but suddenly there's a massive spurt of activity. So that seems to be the pattern of a lot of tech, fast-growing but early stage companies.
Yeah, Alex, thank you for reminding me of some of those when you did your introduction. You guys have definitely ridden some very painful periods with us, and not all of them were our fault. Obviously public markets have their own cycles and things, but look, as a business, Yogi's just under 5 years old. So in terms of where we are, if you look at Silicon Valley VCs and things, they'll really look, year 7 is when the big B2B companies will start to sign their global enterprise clients. We've done that in sort of year 4. So whilst it's been some of those slow, painful periods, we've actually moved extremely fast in terms of building a platform that's suitable for the biggest and best in the world. And that's probably the really exciting thing that Yogi's done. But it's been a big technology challenge because, as you mentioned in your introduction, we're not trying to solve the smaller problems in delivery. And I think a lot of people think of delivery as, things like pizzas going from store to home or florists delivering flowers to the neighborhood. But when we went out to solve this problem, it was looking at global supply chain problems where, especially in the region, Asia Pacific, some companies up to 15% of GDP or more is spent on logistics because of the scale of what's going on and the inefficiencies in the market. So we went and really focused on solving these multinational problems and started to build solutions that do end-to-end, meaning that we'll pick up anything from a container-sized object, move it across borders, and then roll it out. They'll open the container, they'll do palletized movements, and then they'll move it into last mile. And over the last 12 months, we've done some really interesting things where we've signed 3 of the biggest companies in the world to come onto our platform. So Kuehne Nagel is globally ranked number 2 as a freight forwarder. Geodis is the French number 1. They're about 3 times the size of Toll, and they're a global top 10, and they've come on board for Asia Pacific. So Kuehne Nagel signed a global master services agreement. So they're really looking at a solution that can get them cloud-based and customer-focused around the world. And then recently we signed an agreement with a Maersk partner, Maersk being the biggest shipping company in the world. Basically, for the scale of Maersk, you're looking at basically 1 in 5 things you touch has been moved by a Maersk ship. They run 22% of the global market. And what we're seeing now is these big companies looking at all sorts of customer-facing solutions. So one of the really exciting things and validating points over the last 12 months, as you mentioned, is that we've rolled out projects, not just with these types of companies, but we've rolled out projects that service all parts of the supply chain for these companies as well. So, for example, in Kuehne Nagel, it's very e-commerce focused to begin with. So we're doing mass movements of parcels across the Philippines for a global marketplace, big Amazon competitor. Then you look at Geodis and Maersk, and we're looking at these big cross-border trucking solutions. So we're running trucks through multiple countries, multiple warehouses, and that's a solution that no one else really on the market to provide. So that's a really unique solution for us in that multi-sector, multi-leg, cross-border, integrating with some big platforms like WiseTech, and really helping them be efficient, but also win customers and retain customers through that visibility that they're providing.
And tell me, Ed, about the process of securing a massive multinational that it's a leader in its field. You identified a niche in Southeast Asia, I guess, where you started, and you thought there you could test your model and get some runs under your belt. How do you go from there to signing up 2 or 3 of the biggest companies in the world who have been in the industry for many years, generations? What sort of due diligence do they go through to select a company like yourself, a relatively small public company in Australia at the other end of the world from some of these European companies? How did that process come about, and what's the depth of due diligence that they must have gone through to commit to you and expose themselves to Yogi?
Well, the first one is very slow, right? I think no one wants to be first in these type of sectors and adopting, especially new technologies. I mean, normally our customers would go to Oracle or SAP for a solution, and it's easy to tell your boss that you've selected SAP or Oracle. So to come to a company like Yogi is obviously a big risk for these big groups. So the first one was a bit slow, but the next few have been extremely fast because we've got that validating point. But there's some really important things that they're looking for. The absolute be all and end all is obviously security. So, you're looking at Kuehne Nagel, Swiss based, very security focused. Maersk have lost hundreds of millions of dollars over the past couple of years in security hacks. So we have security teams looking all over the platform to make sure that it's secure, that we're doing the right things with data, all these types of things. And then you're going through what we'd call a capability review. And often in 2 of the projects, we've gone through capability reviews and been the last company standing once they looked at, well, these are the features and functionalities we need to meet the use cases that we want to provide. And really, that's the point that all of our competitors have dropped out and been the point of where we're last man standing before we get to price, which has been a really good thing for the business, and helped us sign 3-year contracts with these companies, because it's a very big decision for these companies to choose a technology solution. I think you've probably seen some articles in the paper recently about Toll, who have been losing money, and they've had about 1,400 different technologies across their platform. No actual central point of data to understand what's going on. So all the companies are trying to get less and less technology. They're trying to keep away new solutions, and they're trying to get maybe 1, 2, 3 solutions. And we've been lucky. Kuehne Nagel, for example, I think we're one of the first entrants of cloud-based solutions into their business. And so that's a big decision, and that's a global IT director type decision who's doing a lot of analysis, because they don't want to get back to having 25 solutions in 2 or 3 years. They want to have 1, maybe 2 solutions that they can reuse, and it's easier to manage. So capability and security are the primary things. But as I mentioned, capability-wise, we're a real standout in the sector.
And you're on the cusp now, as a result of these major contracts, from going to from a relatively small number of transactions, even though they've been growing themselves, now to, you know, potentially tens of thousands of transactions. Why are they confident you can deliver on that type of outcome? And more particularly, why are you confident that as these transactions and revenue that flows from that will grow, that you can manage that growth?
Yeah, it's a good point. And just a few days ago, we went through our first Singles Day with I guess a company that's probably where Singles Day was invented, and that was in the Philippines. And so that's a day where you get massive volume through the you know, marketplaces and then into logistics networks. So we continually get tested, and we also have our customers really coming into our APIs and testing our platform for scale as well, because they're all looking ahead as well. So we'll have a customer come in and fire in tens of thousands of fake parcel deliveries within a couple of seconds. And then they'll benchmark us and check us. And we're seeing scores of, say, 300, 400% faster to process with 100% accuracy against the company that we replaced. So we're seeing really good scores there. But the nature of our platform, we've built a microservice platform, which is completely unique and could be a whole other webinar, but it's a really unique way to build based on Elixir. So one thing my CTO said the other day is that he's pretty confident that we can roll out any enterprise project in under 90 days, which, you know, you're usually looking at 3 years for the traditional technology stack. So we're very agile, very scalable, because we have a whole what we call concurrency capability, where we can fire up hundreds of servers instantaneously to solve problems on these transactional volumes, and very stable. So, you know, as a young company, we've hit all of our uptime metrics for a long time now.
Right. Okay. And I often get asked when talking about Yogi, where does Yogi fit in the context of a FedEx or a UPS? And in Australia, you know, maybe Australian Post, or more particularly, people talk about WiseTech. Can you give us a little bit of perspective on that?
Yeah, it's a good question. So, for example, Geodis, one of our customers there, they were the number one customer of WiseTech when WiseTech listed around the same time as us in 2016. So WiseTech are a cross-border administration solution. A lot of the companies you mentioned, UPS and DHL, will use WiseTech for the administration of cross-border goods. For example, if you're bringing in a container full of palletized goods, you'll have to do all the paperwork and pay the duties or GSTs and get customs clearance and these types of things. So WiseTech manages that freight forwarding component, the administration. What we're really managing, and we actually integrate and then complement WiseTech at Geodis by, once the administration is complete, we manage all of the physical movements. So where is it going? Which trucking company is using it? Who is it going to? How do we get proof of delivery so that we can get paid? And this is a big problem that we solve, where you're seeing companies taking 30, 60, 90 days until they can even invoice, and then another 30, 60, 90 days until they get paid by their customer. And we're bringing that 30, 60, 90 days into 1-2 days, because we're integrated into their global forwarding system, and we can send what we call proof of deliveries back. So it's all digital, it's all real time, so they can get to cash faster with greater efficiency across their network. In terms of the DHLs and UPS, we'll be a software solution that they could use to support their networks. So we're not a carrier, we're not a logistics company or a logistics software, and we can support them. Most importantly, where we really help is with subcontractors. So, for example, Geodis, Maersk, and Kuehne Nagel, we would all know them as companies that don't really own trucks. So a lot of them use 100, 200, 1,000 subcontractors, which is a massive problem in terms of what we call visibility, accountability, and control. Who's doing what? Are they on time? Is the customer happy? Can the customer see where the goods are? And then obviously time to payment as well. So you're getting lots of paper trails of payment, which take months, and then the carrier doesn't get paid. So we speed up that whole process, make it more efficient, even across multiple movements.
I see. Okay, well, you better watch your back with WiseTech. They seem to gobble up everyone that seems to have a service that they can't do or that is aligned with them. So watch your back on that one. But just briefly, and to finish off, Ed, what's next for Yogi? You've talked about a lot of things. What are some of the leading indicators for our listeners to watch out for in terms of how you measure your success going forward?
Yeah, so we've got a pretty exciting schedule in terms of, I think the next few weeks we're rolling out about 6 countries worth of deployments, 6 enterprise country deployments concurrently. So that's the first of what we expect to be a number of projects rolling out across the region and around the world. So we have got really good relationships. We're getting really good customer feedback from our customers. So we expect to have continued projects rolling out across 2021, 2022. Within these companies, I mean, the 3 customers we're talking about are not our only customers, obviously, but they're about $100 billion in annual revenue between the 3 of them. So there's kind of endless business development to be done in those groups and to support them with all of their problems around the world. But then new enterprise customers that we're speaking to, we've got lots of discussions going on. So we'd call it ongoing project deployments, whether it be a new country, whether it be a new project within a country. Lots of opportunities ahead, and we're just sort of hitting the ground running on these big enterprise go lives at the moment. So we've done a couple this year, and as I said, we've got a lot more to come.
Right. Well, thanks so much, Ed. It's early there, so we'll let you get straight further into work. And thanks for joining us. And I think I respect your resilience in terms of the difficulties of starting up a business, but I'm really excited now by the platform that you've built and the connections you've built and the customers that are coming. And I think it's going to be a terrific journey going forward from here. So thanks again, Ed, and look forward to seeing you when you can come back to Australia.
Thanks, Alex, and thanks for you and your team's support over the years as well.
Yeah, thank you. And ladies and gentlemen, those are the 2 speakers for today. So I'll just say a few further words to update you on where we are. As I mentioned, we have recently announced capital raising for the company, and we were able to, that has a number of tranches to it. The first tranche has already been completed, and the second tranche of the placement will be put to shareholders at the combined AGM, and these additional resolutions relating to the capital raising on 15th of December. And of course, there is an entitlement offer to current shareholders as of the record date at the time. If we're successful in all of that, Thorney itself will take up our entitlement, and we also participate in the placement. So I still will hold 21% afterwards and be the largest shareholder and have the ongoing commitment alongside all other shareholders. But we will have raised approximately $36 or $37 million, and that will position us strongly to go forward with more investments. We will be perhaps lightening some of the listed companies where appropriate. We'll be adding to some of the listed companies where appropriate, as we always do. But in particular, this gives us some firepower to take on more pre-IPOs, which has been a very successful opportunity for us, as well as others a bit longer term in the cycle. Now, the important part about that is we're getting, as I said, insights to the company earlier. We're getting a far cheaper entry point than the IPO itself. And we're getting to know and understand management, participate in their helpful in their selection of directors, talk to them about the strategy and the speed of deployment of cash, and all of those things that our years of experience can bring to those companies if they're prepared to engage. And happily, most of them are prepared to engage. So we have a very good position in that regard, and also be able to invest overseas in some of the upcoming tech companies, as I mentioned, in Israel, in the United States. Now, the great thing for you, ladies and gentlemen, is most of these deals that I'm talking about are not available readily to any retail investor in the normal course. They're proprietary deals. They come through our network that we've built up over many, many years. They come from direct relationships with entrepreneurs, people, other investors globally that we've teamed up with before, directors or chairmen of companies that we've been engaged in. So it's a very exciting positioning for us, and it really is a great validation for us on the initial mandate that we went out to you shareholders to support. That is to create a vehicle, a listed vehicle with an everyday share price, but could be a portfolio position across all stages of the life cycle of a tech company. Very early stage, mid-stage, pre-IPO, and listed as well. So it's a kind of unique offering. We weren't sure how people would react and how they would have the patience about some of these unlisted companies if they come right through to their IPO or trade sale. But happily, our NTA has gone up more than 100% in the few years since we've started. We're up as of October, I think 35 or so percent NTA after tax for this current financial year. And November is looking pretty good for us as well. And hopefully with some of these IPOs in December and the first quarter of next year in the pipeline, we'll have some continued success. Now, we did raise the money at below the NTA per share, but above the current share price. So whilst I was happy to get above the current share price, still disappointed that we have a discount to the NTA, which is currently, or as at the end of October, when we put out our current NTA, was a roughly 20% discount. The LIC sector generally is trading at a discount, but it's definitely our intent and our desire and our work ethic will be behind it to bridge that gap through more webinars informing you, through better performance, and through hopefully good management of our cash investment decision making or capital allocation. So we hope to narrow that gap, that discount further, and we hope to continue to perform. And we're pretty excited by the portfolio that we've got and also the spread of the nature of the tech that we're investing. We're investing in fintech, as everyone is associated us with, education tech, and we have another company called Cluey, which is listing in December, which is a fabulous growth company. Biotech and life sciences, health tech, we just heard from Baju, agricultural technology, information technology, machine learning or AI, robotics. We have exposure and we're looking in many, many areas. And when these things kick on, like our lead company now, Imugene, and the market comes to understand their potential, we can have a very big share price movement in a very short period of time. So, ladies and gentlemen, we've come to our allotted time, and I don't want to take too much, but we will continue these briefings for tech shareholders. And from time to time, we might have a written letter as well, just to update you. But so far, we've had very good response to doing these webinars with more people engaged. And so our intention is to do that for Thorney Technologies, as we will be doing for our sister company, Thorney Opportunities, TOP, which the next one will be on December the 2nd, and invitations will go out to those of you who are top shareholders as well in the next 24 hours. That's December 2nd. But I think if people think we can communicate and tell our message in a different way, please let us know. Otherwise, we're very happy to engage in this form. So we thank the speakers again, and we would thank you shareholders for supporting us, for engaging with us, for asking questions. Please continue to do that. Be healthy and be well during this period, and all the best for Christmas. Look forward to these couple of IPOs coming up in the next month, and then the journey in 2021. So thank you very much again, ladies and gentlemen, for your participation.